Ladies and gentlemen, it gives me great pleasure to welcome you all to the 2024 Annual General Meeting of Hazer Limited. Tim, can you hear at the back there? If at any stage it goes quietly, just put your hand up or something so I can see. As it's now 2:00, I'm advised by the Company Secretary that a quorum is present. I can see a quorum is present. I officially declare the meeting open. My name is Tim Goldsmith. I'm Chairman of Hazer Group Limited. With me here today are my fellow directors. Our Managing Director, Glenn Corrie. We'll hear from Glenn later. Danielle Lee. Dr. Jack Hamilton. And our other director, Andrew Hinckley, is in the UK at the moment. He's joining us. He's on the link. So attending via video conference. Also in attendance is Joan Dabon, our Company Secretary. And in fact, this is their offices. And it's the first time this office has been used for an AGM. We are the guinea pigs. So we are hoping everything will go off without a hitch, Joan. Total confidence. We also have Vanessa Coe, representing our company's auditors, RSM Australia. She's at the back there. And our representatives from our share registry, Automic, will also act as the returning agent. With directors and shareholders of the company being located in a number of Australian states and internationally, today's AGM is being held in hybrid format. So we allow both in-person and remote participation, and we have a number of people who are joined. There was over a dozen or so, about 10 too, so we'd have more than that now. So we do have people who are online as well as here in the room. I'm delighted to extend a warm welcome to all of our shareholders who've joined us in either of those manners. I'll deal with the formal business of the meeting first, which was outlined in the notice of meeting dated 21 October. And we'll table each resolution and address any questions that are relevant to the resolution. And I'll try to keep things moving as fast as possible, because I think the far more important part and more interesting part for all will be when I pass over to Glenn at the conclusion of the formal part of the meeting. And Glenn will then provide an update on where we are and where we're heading and what's going on. Sorry, I have to do a fair bit of this, which is fairly sort of strict and stated, so I'll have to read out. We've received on the proxies, we've received a number of valid proxies for the resolutions which are to be considered today. And a summary of those are displayed on the screen. In total, over 20 million proxies were received, which represented just over 9% of the company's issued capital. On all items of business where undirected proxies have been given to the chairman, I'll be voting those in favour of each of the items. As mentioned earlier, Automic, our share registrar, will conduct the voting for the meeting through a poll, and votes will be counted after the end of the meeting, and results will be posted on the ASX and Hazer's website, either later today or tomorrow, depending how quickly it all works. For this purpose, may I request all members physically present in person or by proxy to kindly fill in yellow voting cards. If you have not received your voting card, please see Automic. On this card, you'll find a series of boxes for voting. When asked at any point during the meeting, please indicate your vote on the card by ticking or marking the appropriate box for the resolution. You must mark either for or against. When all agenda items have been dealt with and your voting cards completed, we can pass them to the Automic staff. For those attending virtually, shareholders in attendance via Zoom that have already submitted the vote by proxy should note that your votes will already be counted towards the poll and will be in those numbers which you saw earlier. Do not need to lodge another vote unless you wish to change your proxy instruction. And if you're online and you do want to change your vote by proxy, you can do so by following the instructions that should be provided on your screen. Please note the online voting portal is now open and will remain open until the poll is declared closed, which I'll do at the end of the formal part of the meeting. Obviously, your votes need to be submitted before we declare it closed. If you are a shareholder, proxy holder, attorney, or authorised rep and wish to ask a question, please raise your cards and I'll address each question one at a time. To be honest, guys, we don't have too much formality in this company. If you have a question, we'll answer the question. So we don't really need all of that formality around it. Those in attendance via Zoom, though, will need to put in comments and questions using the Q&A function, and they will come through to us. And again, depending how the questions come, we'll try and answer those. You'll need to type in your SRN or HIN so that the moderator can identify you. But again, let's just get moving, and hopefully there'll be no issues on any of this stuff. As I mentioned earlier, we've declared the voting open on all resolutions, so do feel free to get on with it. Now, are there any questions in relation to any of the voting process or anything else before I move on to my chairman's address? Hopefully it's all fairly straightforward. Okay, so from the chairman's address, shareholders, the Hazer team has worked hard throughout the year to complete the commissioning of our commercial demonstration plant and achieve first production of hydrogen and graphite. And that is a transformational milestone for our technology and company. And those of you who were here last year will recall that we were just at that moment in time before we were ready to start, where we were excited and hopeful, but also we were a bit nervous because it was a bit of the unknown. So it is fantastic to see where we've come to in this last year. And I truly believe we're now well placed to capitalize on the decarbonisation opportunities which emerge across our industry as a focus and via our partnerships globally. In this address today, I'll provide an update on the continued progress of our growth strategy to deliver value creation for our shareholders via the commercialization scale-up of our technology. But I think more importantly, after I complete and pass over to Glenn, he'll present his high-level views on the achievements this year and, again, more importantly, on the outlook and where we're heading for. So, and I mentioned commercial demonstration plant. We tend to refer to it as CDP, just because it's a bit quicker and easier. So when you do hear that, that is what we're talking about. So let me start by discussing the CDP, which is in Kwinana, so not too far away from here. As part of our phased approach to scaling production, the team was safely executing the CDP and planned performance test program to demonstrate commercial readiness of Hazer's proprietary technology. The CDP has progressively been de-risked, the Hazer process and increased hydrogen and graphite production throughout the year. And we recently completed over 450 hours of continuous operation, more than 1,250 hours in total this year, with high plant reliability and methane conversion rates. I would like to acknowledge the hard work and resilience of the Hazer team that have driven forward this world-first project and achieved these operational results, which do place Hazer as a leader in the clean hydrogen arena. For those in the room, I'd like Tim Forbes to just raise his hand, and Tom Houlihan, our COO. So those two are the technical guys in our team. Anyone who would like to know more about the CDP, speak to them. And if they are busy, Mark Edwards, who is also with us, he was the COO until August, Mark, has been with us for many years and really was behind the building of this plant. Frankly, I've been involved in technology scale-ups over 20, 30 years. I don't think I can remember a non-commercial plant which has worked as smoothly as this one has over my years. It's a real remarkable achievement what the guys have achieved. So I do absolutely suggest you take the opportunity to talk to these guys or others in our team who can also give you their thoughts. So enough of the CDP. During the year, engineering work associated with the integration of the next generation reactor and heat exchange equipment has also progressed well. And again, Glenn will refer to this when he does his talk. That work is now in advanced stage and has been developed to support the scale-up of our technology to commercial levels of more than 20,000 tonnes per annum of hydrogen production. Installation and testing of the next generation reactor at the CDP will commence in 2025. So effectively, we've completed for the first level reactor all of what we needed at the CDP, and we've now moved on to the next level. Focusing on demonstrating continuous operation at commercial scale has assisted with growing Hazer's global commercial project portfolio. The overall outlook for our Hazer technology remains enormously promising, with international interest in methane pyrolysis technologies continuing to increase. We've positioned ourselves strongly when compared with competing technologies, building strong foundations based on our technical development and R&D program and the positive impact which has come from our flagship CDP. We continue to develop partnerships, and it remains our aspiration to have 10 projects in 10 years' time. Our intellectual property and ability to deliver world-class technology to heavy industry globally sets us up for a future of growth and opportunities. We've also advanced during the year important commercial projects. Firstly, we have signed a binding project development agreement with Fortis BC in British Columbia, Canada, for a plant with capacity to produce up to 2,500 tonnes per annum of hydrogen, a scale up of 25 times from the CDP. Under the terms of the project development agreement, Hazer now receives payment for early development work associated with activities relating to core technology components. This early source of revenue delivers cash flow now and all the way through to the front-end engineering and design. These ongoing payments enable Hazer to support these activities in a commercial, viable and sustainable. In Japan, Chubu Electric and Chiyoda are our partners over there, and they have completed feasibility studies for the development of a Hazer facility in the Nagoya area in Japan. The study results support the technical and commercial viability of the project. During this year, we also announced extensions to existing partnerships with Mitsui and Onji, and entered into a non-binding MOU to collaborate on the integration of Hazer's hydrogen production technology into POSCO's low-carbon steel production at Pohang, Korea. POSCO is one of the largest steel mills in the world, if not the largest, actually. So again, the fact that they are the partner we have in the steel industry globally is a huge validation of all of what we are doing here. In recent months, the challenges related to the cost of production and transportation of green hydrogen produced by electrolysis, so there's a very different method of producing hydrogen than what we do, have featured in the news. I say we are different. We use methane pyrolysis technology, and that is increasingly being recognized as an attractive alternative pathway to producing affordable clean hydrogen and graphite. And it's all about the energy which is required. Electrolysis is splitting water, hydrogen from the oxygen, and that needs, I think, is 6 times more energy, Glenn, than it does to split the gas. The scale of demand for Hazer's technology has notably increased, with potential project partners regularly seeking plant capacities of between 50,000 and 100,000 tonnes per annum of hydrogen production. I think, put another way, that what we're doing with the gas is an existing monstrous industry in the world, and which is already producing hydrogen. The electrolysis industry is a future industry which isn't producing big swathes of hydrogen today. Huge difference from what Hazer is to what other hydrogen projects which you may hear about typically are. Hazer continues to engage with a range of potential customers and project partners with a focus on hard-to-abate sectors in Australia, North America, Asia, and the Middle East as our target markets. I'd also like to thank you, our shareholders, for supporting us again as we commercialize our technology, and those that supported our fundraising activities that enable us to accelerate our technology development and pursue business development opportunities for Hazer commercial development. It's not easy bringing a technology from scratch all the way through to commercialization. We're still not quite there. We've been going for a lot of years, and it's only because of the support we have had from shareholders ever since we've been listed in 2016, which has enabled us to continue on and strive to be kicking the goals which we are. And this is a globally leading technology in a disruptive section, and that's only been available because shareholders have supported us. So shareholders, this year has been a great year of progress as we move past the challenges of building the CDP and have successfully showcased Hazer's world-class methane pyrolysis technology. I assure you the board of directors are committed and excited about the journey ahead, and we welcome your ongoing support as we move the Hazer technology into the commercial world. Now, I think you all understand that the chairman's address is posted, which is why it's sort of a little bit red, as opposed to being more of a discussion. But Glenn will give the discussion after the formal close of the meeting, where you'll be able to dive into some of those areas in a little bit more detail, and obviously ask any questions you would like of Glenn at that time. So let me move on to the formal part of the meeting. With the leave of the meeting, I do not propose to read the resolutions and the accompanying explanatory memorandum out in full, but rather to summarize them and move through the items of business in a relatively rapid fashion, obviously providing ample opportunity for any questions which any shareholder might like to ask. The proxy position for each proposed resolution will be displayed on the screen as we get to them. The first item of business today is to receive and consider the annual report of the company, together with the report of the directors and the auditor for the year ended 30 June 2024. Are there any questions or comments on the annual financial statements or question to the auditor on the conduct of the audit and their audit report? Is there anyone here who would like to ask a question? Anything online, Joan? Okay. As there are no more questions, we'll now move, or no questions at all. We'll move on to resolution number 1. Resolution 1 is an advisory resolution only in relation to the adoption of the remuneration report. The resolution and proxy votes received are displayed on the screen. Again, let me see if there's any questions anybody would like to ask in relation to this resolution. Okay. Nothing online, nothing here. So with no questions, I'll proceed to item number 2, which is re-election of Director Mr. Andrew Hinckley. Oh, sorry, it's Jack Hamilton. For those of you who were here last year, might understand that Dr. Jack Hamilton did call me up and not order properly last year, so I just thought I'd sneak that in for a bit of fun. So it is Dr. Jack Hamilton we're talking about here, and I would say that Jack's been on the board. This is, I think, 3 years, Jack.
3 years. Yeah.
He's been a tremendous addition to our board. He has a technical background and has been very helpful in helping to nurture and mentor our team at the CDP in particular, and our engineering group, and also provides the board very good insight on their progress from a technical side of things. So absolutely comes with the board's full recommendation for re-election. Are there any questions or comments from anybody in the room or online?
No questions online.
No questions online? None here, so no questions. We'll proceed to resolution 3. Resolution 3 is the re-election of Mr. Andrew Hinckley. Andrew is a representative on our board of our largest shareholder, AP Ventures, and AP Ventures is basically the largest VC into hydrogen investments globally. So again, very valuable addition to our board because he sees what's going on in the world of hydrogen all around the world and provides extremely valuable input to us. And the resolution and proxy votes are displayed on the screen. Are there any questions or comments regarding this resolution? Nothing in the room, Joe?
No questions online.
Thank you. So we'll move on to resolution 4, which is the approval of 10% placement capacity. Resolution and proxies are on screen. Any questions or comments on this one? Nothing here.
No questions online.
Thank you. Resolution 5 is the approval to issue 146,618 shares to Mr. Glenn Corrie. This is part of his short-term incentive. And shareholders might recall when Glenn was first employed, we discussed with you that we try to conserve as much cash as we can as a pre-revenue company. So Glenn's remuneration was structured so that there were equity awards as part of that balance. And this is the first issue of shares to Glenn under that system. So the resolution and proxy votes are displayed on the screen. Are there any questions? Anything online? Thank you.
Yep.
And resolution 6, the final resolution, is on renewal of proportional takeover bid provisions. The resolution and proxy votes are displayed on the screen. Any questions or comments on this one? No, Joan, anything online?
No questions online.
Thank you. In the interest of not wanting to feel as if you don't have time, has anyone's got any questions on anything they'd like to ask in relation to any of the formal part of the meeting? Now is a great time if there is any questions. Otherwise, I'll look to wrap up the formal part and pass over to the more interesting piece where we can hear what Glenn's got to say. Okay, as there isn't, I do request any shareholders here who are voting by card to complete them and provide them to Comic, and I can see that that's being done as we speak. And we'll just pause for a few moments to allow people online to vote. I've already voted. I think it's the others. Okay, yeah. So I can do. Okay, so we'll formally close the voting and we'll close the meeting at 2:20 p.m. So thank you all for your attendance and, as we said earlier, for your ongoing support. And I'll formally declare the meeting closed, and I'll pass over to Glenn, our Managing Director, to provide an update on the company. Thank you.
Thanks, Tim. Good afternoon, everyone, and thanks for joining our AGM. Just a couple of other intros, if I may. Neil here is our CFO. We've got Luke Cox, our Chief Commercial Officer, and also Carsten, one of our principal engineers. So we've got the full team, and any difficult questions in that direction, if you may. But I'm going to just jump straight in, if that's all right, and just go through some of the, really just reflect on our performance last year, but also look at the forward strategy for the company, in particular the next 12 months, what we're trying to achieve with the company. We've also received a number of questions online, which we'll try to address throughout, or at least at the end, and certainly leave the floor open for questions at the completion of our presentation. That's the CDP. It's a beautiful photo of our commercial demonstration plant. It's if you haven't had the opportunity to get down there, we can certainly try and organise visits. Now that we're operating, we do try to get investors and as other stakeholders down to the plant. It's a wonderful thing to see in for real life. When you sort of see it in a picture, you don't really appreciate kind of how big it is and also how important it is. So it's a really big, important part of our strategy, and to have it operating is absolutely remarkable. Tim talked about the market. Just to set context, the hydrogen market today, many don't appreciate, it's about 100 million tonnes per annum. It's massive. It is about $180 billion in value. If you compare that with LNG, which is liquefied natural gas, it's about a quarter of the size of the LNG market, but it's greater in value. So it gives you some context for the size of the market that we're talking about. All of that hydrogen produced today is what we refer to simplistically as dirty hydrogen. Every tonne of hydrogen produced in the world is associated with 10 tonnes of CO2. That's big market, big problem, big solution. And that's kind of the, I guess, the vision behind what we're doing and the strategy that what we're trying to achieve with Hazer. I like to start with this because Tim mentioned green hydrogen. We're not green hydrogen, to set the record straight. We are decarbonising gas with a world-leading climate technology, and we're accelerating the pathway to affordable and clean hydrogen much faster than any available process and technology that's in the market today at scale. Three important phrases in there: decarbonising gas, cheap, clean hydrogen, at scale. They're the three most important corner points of our competitive advantages of technology. And we'll speak to all of those very shortly. It was a good year. In fact, it was a very good year for us. Clearly not reflected in the share price yet, but we achieved a number of really important milestones. The CDP has been transformational for us, very clearly. You will have seen the announcement that we put out this week. We've completed our test program for the reactor as well as the CDP. It has gone astonishingly well. We started the year with a standing start from a plant that we didn't know how it would operate, through to over 450 hours of continuous operation at industrial scale is a remarkable achievement in 10 months for a first-of-a-kind technology. So we're not resting on our laurels, of course, but it is a wonderful achievement to have that behind us. That keeps us at the front of the race in terms of the peer group and the competitors, and we thank you for your support throughout the year to support the finalisation of that. But it clearly de-risks our technology, and our focus now is on commercialisation. The second box there is all about our commercial stuff that we've been doing. Tim mentioned binding agreement with Fortis. It is a very important agreement. It's our first commercial scale project, 25 times where we are today. We have agreed in principle license framework. Okay, that's the first step always in terms of a license agreement. It's a very positive step. More importantly, I guess at this stage is we are starting to receive first revenues from that project through engineering service agreement and arrangements that we have in place with Fortis. That's the model we're taking with every project that we do in the future. So you can see as we aggregate projects into our pipeline, they're going to start funding our business. Okay, so that's a big part of the funding mechanism and the CapEx light model that we have. POSCO, we've signed an MOU with POSCO, the 6th largest actually steelmaker in the world. We think they're the world's largest outside of China. So very big player, very big industry, very big problem, 8% of the world's CO2 emissions. Okay. We've been chosen by POSCO as the preferred technology provider for their green steel. And you can imagine how big that could possibly be. This has been an enabler for a lot more deal flow for us from steelmakers worldwide, in particular in Asia. We're very excited about this. It's early days, and there's a lot more work to be done with this, but we're very excited about the future of our partnership with POSCO. More recently, Mitsui have been a big strategic partner and relationship for us for the last 3 years. We've just recently extended that on an evergreen basis. They are working hard with us to identify potential markets and customers for our graphite. And I want to share with you some of the insights coming out of that shortly. It's certainly not just a piece of paper. There is a lot going on behind the scenes. Tim and Tom are supporting that, as well as some of the team as well, and Luke, to really drive forward where the right applications are for our graphite. And you'll be surprised, it's not just lithium-ion batteries. It's a big market that has got big potential and big value for us potentially. Corporately, we continue to kick goals. Very proud to say we've achieved over 100,000 man-hours LTI free at the CDP through a construction phase, through an operations phase. Commissioning is hard. And it's a testament to the team that we haven't had any incidents there. We're never comfortable with HSE, of course. But it is an area that we've been focused on. It's a priority for the firm, and very proud of our results thus far. And I think that's actually gone to 150,000 hours since the end of the financial year. We maintain our robust funding position. Very pleased to announce this morning another 5 million of inflows from the ATO. Thank you for our R&D, which we spend. Every dollar we spend on R&D, we actually get 50 cents back. So we're very fortunate to have that system available to us. Of course, that offsets future spend. And more importantly, with our existing cash, it just reinforces the strength of our runway through some pretty important milestones. As Tim said, we're pre-revenue. All of these things for us are very important to establish a funding pathway. And then finally, quite importantly, making sure that we've got the bench strength with the team. It's not about more, it's about the right people into the right roles. Putting horsepower behind the R&D, the tech development, as well as the operations and the engineering side. And that's what we're focused on. Everything else supports the business and driving forward the strategy. Pleased to say we're on track. Of course, we can always go faster. I'm impatient like everybody else. But if you looked at that slide 12 months ago, we weren't able to tick off 3 things at the bottom. So we're making progress. CDP, de-risking the tech. Graphite volumes, I think we've got tons of volumes now coming out of the CDP. We're in the market actively with Mitsui and others to do larger scale testing and really try and draw in the attention of prospective customers. Okay, it's a very unique product, and I'll talk to that shortly. And then thirdly, and probably more importantly, we're getting continuous validation and endorsement of the technology. Today, we have about 40 customers in the pipeline. A third of that would probably be big oil and gas companies worldwide. Power generators, utilities, and ammonia probably make up the other third. And then you've got another third that is, graphite, potential graphite users, and other big industrial players like steel makers that all see the decarbonisation potential of Hazer. Why is this important? If we're developing a technology for a market, you want to know that there is a market going to be established for you. And last year, we could tell you that we were getting demand for scales of projects in the order of 10 to 15,000 tonnes per annum. We now have customers or prospective customers saying, can you build 100,000 by 2035? So there's been a big shift in the demand, if you like, for pyrolysis. There's been a big pivot away from green hydrogen, and with gas being a very important part of most developed and non-developed economies, the transition from gas into hydrogen with Hazer is much more cost effective and it's faster, and that is starting to get traction. Okay. You know our process well. Okay, so again, not green, but we take any gas, methane rich gas, and we convert it into, if I get this right, sorry, there we go, clean hydrogen and carbon in the form of graphite. Okay. The X factor for us is the use of this drum roll, iron ore as the catalyst. That's the most of the intellectual property on the company. Okay. There isn't anybody in the world that can produce hydrogen with pyrolysis using iron ore as a catalyst in a fluid bed reactor like we can. That is protected in over 32 jurisdictions around the world, under over 70 patents in those jurisdictions. So very strong IP protection for our particular technology. And one of the other nice advantages is we use a fluid bed reactor. I'll let Tim explain that during the break, but effectively fluid bed reactors have been repurposed and adopted from the refining industry, principally fluid catalytic cracking, as well as metallurgical industries. And that is a proven pathway to scale. It's why we've chosen that reactor to get us to very large single train capacities over 50,000 tonnes per annum. That's where the demand is, what we're trying to achieve with the technology: bigger, better, faster, more efficient with the right kit. Okay. CDP I spoke about, that's again a lovely photo of it, but we've just hit 450 hours of continuous operation, but more impressively on a 99.6% reliability factor. If you've ever had the benefit of working offshore or in a facility and hearing uptime or availability numbers, you often hear maybe 85 or 90% things going down. We're the first of a kind to be able to report that we've had some very extended runs of 99% reliability is world class. And it's astonishing to see that when you've been around the oil and gas sector, to see numbers in the 80s and 90s. But it's a remarkable achievement. It talks volumes to the reliability of the technology. It speaks volumes to the equipment that we've chosen, and it speaks volumes to the team that have been operating the plant. Okay. So we've ticked off, we set the bar high. Remember, I think we showed this slide at the last AGM, and we've certainly been using it throughout the year. We set the bar high in terms of the KPIs for the firm and the CDP, and I'm very pleased to say we've ticked off most of them. Okay. We can always be doing better, and we are always striving for continuous improvement. But in basically at the highest level, running our plant on a continuous basis at an industrial scale has been the objective of the company. And that is the announcement that you saw this week. Tick, the tech is doing everything that it should be doing. Of course, we've got things to do to optimize it for commercial deployment, but there is no red flags that have come out of the last 12 months that make us concerned about its inability to scale. So our confidence behind the commercial readiness of the tech is very, very high. Okay, so we're excited about that. And there's lots of black gold, as they say, which we are currently providing to some of our commercial customers. I won't go into the detail, but we're giving a little bit away here in terms of the chemistry. We've taken some of the numbers off for IP reasons, but basically on the top right-hand side, you can see that actually if you look at the CDP data, the commercial demonstration plant data, it correlates very, very closely with the model that we went into it with. Okay, so it's very nice to see that. I think it probably is done better than we had thought. But over the year, we've been able to say that those dots effectively are correlating very closely with the model. So a very important aspect is we use the model to scale the tech up to 25 times, and then another 3 times and 4 times to that, up to very large commercial scales. So again, just reinforcing the importance and the reliability of the technology. And the bottom one, I guess, speaks in some respects to the flexibility of the technology, in that we've got an ability, even if the bed elevation, for example, so this is broken, that even if it's lower, we still get very high gas conversion. So you can start to see that there's a lot of built-in flexibility and variability in the tech, but we still get very high conversions, even if some of the parameters and the designs need to be a little bit less. Okay, so again, very powerful technology. So wrapping all that up, CDP, de-risk the technology, moving into the commercial phase, and where are we different? Okay, so I like to show this because it really shows the competitive advantages of where we're different from not just the peers in our space, but the industry as a whole. TRL stands for technology readiness levels. It's a scale of 0 to 9. We're at 7, going to 8. It's very, very high. Okay. That basically means you're ready to go commercial. Okay. So that's where we are today. Low cost, I'll speak to. Proven scale is all about our ability to get to single train capacity with that fluid bed reactor. So we tried many, go back 15 years, Hazer tried many other ways of scaling, and we chose the fluid bed because that's what's proven in industry. So that's proving itself to be an advantage. Graphite is a massive value kicker for us. We're convinced, and we're starting to see the feedback from industry on the quality of our graphite. And like I said, it's not just lithium-ion batteries, but it could be a very broad application for industry that could be very high value for us. We're plug-in. We don't transport hydrogen. We give it to the customer at the demand point. And then, of course, first mover advantage in key markets, North America, Asia, Pacific, Europe, and I would add Middle East to that. We've got lots of dialogue in the Middle East going on. That is also a natural place for Hazer technology. The scale-up journey is impressive. It's one every 2 or 3 years, 5 times scale, very successfully into the CDP. And that is $120 million of capital deployed over 17 years. Okay, so a lot has gone into developing this technology to where it is today. And I'm pleased to say that a lot of the spend is behind us. And we're now into that commercial world where others are spending and we're collecting license fees and royalties. I love this chart. It's representative of the US. So we do have similar charts for Asia as well as Europe. But in the US, Hazer, left-hand bar, we can deliver hydrogen to a customer for $1 a kilogram. Could be less, could be slightly more. It's a little bit dependent on feedstock and power and other things. But broadly speaking, $1 a kilogram. That is a third of the cost of blue hydrogen, and it is conservatively a seventh of the cost of green hydrogen. Okay. The holy grail is 2 kilograms, by the way. So we're very well placed. The green hydrogen is the reason why Fortescue, Woodside, Shell, and others in the future have pulled out of green, because it's almost cost prohibitive today. Of course, this is a journey, right? But the ability to have a technology that uses an existing commercial feedstock in gas and convert to hydrogen at low cost is our sweet spot. And we bridge the gap between today and the long run of renewables with a low cost, clean hydrogen solution that can scale for industrial purposes. Graphite, we can talk for a long time about. We're going to provide more information over the course of 2025. We've got a lot more information to share, but it's a very unique graphite product. It's low sulfur, low ash, fits wonderfully into steel making. It's electrically and thermally conductive, perfect for thermal energy storage. It is magnetic, so it works well in water purification. There's a multitude of applications for it. It's a unique product. We've got the partnership and relationship with Mitsui. That's validation that there's a product development value there. And we are working closely with them to establish the markets for our product. And for the first time, I'm pleased to be able to say we give you a bit more depth. And like I say, I think in the course of 2025, we'll provide more. But our priority markets are actually surprising, the sort of the top 6 or 7 there. Concrete, steel, asphalt, bitumen, water purification, conductive concrete, and thermal energy storage. Okay, they all have unique applications. They all see the benefit in what Hazer's graphite can do relative to their existing product streams. And you can start to see drop in potential, limited post-processing required coming out of the reactor, and pricing points, squint your eyes, but anywhere between sort of $500 and over $1,000 a ton is where we're starting to see convergence of a pricing range. It's early, but we're getting very good feedback from the customer base that Mitsui is engaging, and we're getting good feedback from the customer base that we're engaging independently. And to give you some examples, thermal energy storage companies use graphite with small inclusions of aluminium and iron as their storage medium. Big demand potential for thermal energy storage. Hazer graphite is a drop-in, plug-in opportunity to replace quite an expensive and also difficult to source synthetic graphite from China. The market's got an interesting dynamic. Somewhere between 70 and 90% of the world's graphite comes from China. Okay, I think closer to 90 is the synthetic graphite supply side. It may be a surprise to you that in Australia that we have a critical mineral list. Graphite's in the top 10. It's also in the top 10 in the US, in the USA. It's the only critical mineral that is not produced domestically in both countries. We import the majority of our graphite, if not all of it, from China and other parts of Africa, and the same in the US. It's a critical mineral, like hydrogen is a critical substance for the energy transition. And it's potentially very big value for us as a corporation. We plug in, so we're not transporting hydrogen, part of the low-cost model, and the customer base you've seen already. But what's more exciting about this is, like I've said, behind this there's at least 40 conversations at the moment with a vast array of prospective customers, big oil all the way down to power producers, steel makers, all looking for a decarbonisation solution. I'd say North America, I would say Asia Pacific and the Middle East are the priority. Europe, for different reasons, there's a policy sort of over there that makes it a little bit more challenging in the near term. But again, industry needs a decarbonisation solution. Hydrogen industry is large, and Hazer's a good fit for that. In terms of our 4 projects, I've spoken a little bit about Canada already. We're moving forward, not moving forward as fast as we'd like, of course. We've talked about a site selection that's critical. We're hoping to be able to say we're expecting that in the first quarter of 2025. The FEED here has been done. The front-end engineering and design work has already been completed. Once the site is finally selected, I think they're down to 3, that FEED will be integrated, and then the company will be able to take final investment decision. Okay, we're still targeting that decision for the middle of next year. Okay, so that's what's in store for us at this stage. Importantly, we have an engineering service agreement now. So we are receiving revenues from Fortis for all the engineering services that we provide to Fortis under that agreement. And we expect that to be the model for all of the projects that we have in the future, at least those that are foundation customers, as well as the future projects that we've got. Part of that FID will also be the license fee. And we've got the license framework agreed, and it's the numbers in square brackets that we're haggling over at the moment. Okay. POSCO is the other example I wanted to show. Big industry, big problem that needs a big solution. Okay, it's 8 to 10% of the world's CO2. If you add concrete to that, it's 20% of the world's CO2. Okay, so it's a massive problem, and we're very proud to be working with one of the largest in the industry to decarbonize. They have developed a proprietary process called HyREX that actually uses fluid bed reactors in its process. So it's a nice synergy with what we do. But steel making, as some of the team refer to, is where our technology really comes together. Iron ore as a feedstock, gas for use in the DRI, carbon for use in many applications across the steelmaking process, blast furnace, as well as the DRI and electric arc furnace. So it's a very unique market for us and very synergistic with what we're doing as a technology. Couple more slides and then we'll finish up and open up the floor for Q&A. We've talked a lot about our license model. We're CapEx light. Like I said, we've spent the majority of what we need to spend on developing the technology. Going forward, we're licensing our technology. So if you think about the cash flows for this business, it enables us to generate very early cash flows through this model, and we're starting to see that already. the bottom right, you'll see the broad structure for how the license model is structured. Prior to final investment decision is the engineering fees. That's what we're receiving now for Fortis. Post FID, it's license fees, and there's some flexibility in this. Post production is predominantly royalties, sometimes license fees. Okay, so that combination of three, one over the course of the life cycle of our projects is all inflows for us, and that's the capex. That's the strength of the capex light model. For Hazer, we now have no major capex cost below the line. So if you look at that, if you throw all that into a model, the chart on the left is an illustrative plant. If, for example, POSCO were building a plant, the projects actually for the customer are actually very attractive. Each project in our model, assuming a number of assumptions, throws off around $400 million of NPV. That's the project. So they're very valuable projects. More importantly for Hazer, drum roll, sorry, it's strange, but 115, call it 100 to $115 million of license fees over the life cycle of the license term. So you can quickly see the mathematics. Every plant of scale for us is worth $100 million. It's a very valuable product for us, a very valuable project. And it doesn't take many of them to be a very large company. It only takes 10 to be a billion. And that's the size of the prize for what we're driving for. And that's really the strength of the tech. It's also the strength of the economic model to get to a very valuable platform. We've got 4 projects already in the pipeline, okay? We've got 40 in the pipeline, so we think it's fairly achievable to get to 10. If it was 10, it's only a very small fraction of the market. So once you start to multiply this to 10, 20, 30, Hazer could be a very large platform, and that's the vision of the company. We love the fact that we have a very big aspiration and vision. We love the fact that we're not there yet, because that's what drives us as a company to get there, but that's the size of the prize that they're striving for. In terms of a look ahead, this is a little bit backward looking. So we did a lot this year. We ticked a lot of things off, but we've got something similar that we're working on for next year. There's going to be equally a number of milestones ahead of us, but it's going to be focused predominantly on the commercial side. So we're moving away from tech development, but into commercialization, and that's where a lot of the milestones for the future will be. And that's what's really the milestones that will unlock the value of the company for the shareholders. That was really it. Very happy to open up the floor for questions or the lines and go from there. Questions online? Whilst you're thinking of questions, I will just address a couple what I think were relevant that came through online. A couple from Atosha. They asked, what is the impact of the US administrative change and also the IRA? I think that's a very good question. Thank you, Atosha. I think on balance, this is not a political view, by the way. I think on balance, I think it's positive. Why? Because the Trump administration is very pro conventional oil and gas. That will mean more gas. It will mean more drilling for gas. It will mean the supply side goes up. It will mean the prices for gas should go down. What that means is when your technology utilizes gas as a feedstock, it will mean it will be a lower cost feedstock ultimately, and it will lead to lower levelized costs of hydrogen. We're already at $1. It would be lovely to see that drift under $1, but we're already competitive. We don't rely on subsidies, by the way. That $1 I referred to doesn't have any benefits of the IRA in there. We're expecting the IRA to continue. It may be in a slightly different shape, but I think on balance, the change in administration in the US is, I think on balance, a very positive thing for us because it's going to lower down the gas prices and the feedstock costs. Thermal energy storage, I think Atosha asked another question around Dantora. There's a couple of big thermal energy storage companies that we're engaging at the moment. PFAS removal is another one, but we see that as a clear priority for us. I talked about natural gas prices and Mitsui, the graphite market, so hopefully we've covered off on those points. There's a couple of questions come through on Mark II reactor. I'm very pleased to say that we're driving towards Mark II and plugging that into the CDP next year. it's a very important reactor. It's not about de-risking tech anymore. It's about de-risking the reactor for large scale plants. It's the reactor that's going into our Canada plant. So it will be tested in the CDP, but everything that we see so far with our CDP and our current reactor and the process raises no concerns for us, but testing it before it goes into the main plant in Canada is important for us. And that is what Mark II is about. It can get us up to conservatively 20,000 tonnes per annum, but probably, Tim, looking at you, maybe 30 to 40,000 tonnes per annum if you really push the envelope. So that's already a large scale plant. That's what we're trying to demonstrate to the market, that we can take our tech with that reactor up to very large industrial levels and scales. Okay. So look out for that next year. It's a very big milestone for us, as well as the tech. But bigger, better, more efficient is the answer to that question. And then finally, we had a couple of questions here on from Lance. I think, Lance, I addressed these in terms of the production cost of hydrogen per kilogram if we didn't sell the graphite. And you know, yes, it's a value driver. Your $1 may go to, you know, $1.30 or something in the US, so still very competitive.
Would you care to suggest which quarter in next year we might see the Mark II reactor installed, and when might we see convincing commercial results from that?
Yeah, I can give you some guidance. We'll come out in the new year with a little bit more information once we've kind of worked the schedule a little bit. But just to give you comfort on it, the Mark II is actually predominantly built. It's sitting in a shed just not far from the plant down in Kwinana. So there's not any capital required and construction or manufacturing associated with it. We kind of pre-invested in it, partly as a contingency for the tech. We didn't need it in the end because Mark I worked so well. So it was kind of there ready. We've got a little bit of assembly, but nothing that concerns us. I think Q1's about, at the moment, we're just finalizing where we are with the CDP and bringing that down and preparing it for the next phase. Q1 will be about engineering internally and making sure that we get the engineering right. Q2 is about probably a construction side. And I'd say Q2, Q3, for once we've got it plugged in, that's directionally where we're heading at this stage. We've been pretty good with our timelines, at least in the last 2 years, but, you know, construction and other things can go either way, but, you know, that's the broad plan at this stage. Yeah. But results and operating this year is the objective for us. Oh, sorry, next year, 2025, this financial year. If I just wind back a little bit, the Canada project is already also testing some small scale rigs and so forth in Canada at the moment. So there's lots of de-risking associated with the Mark II reactor anyway. So there's lots of de-risking points as we go through this year and into next year as well. So the CDP, and it's not critical, but having it operating, of course, is an important part of, you know, the scale up strategy into that reactor.
Thanks. Glenna seems to have a question. Yep.
Are you able to talk through the contracting process with your clients? So you start off with an MOU, then you follow it up with a license framework. What's the process from there and the timeframe you sort of expect?
Yeah, so MOUs are normally a starting point for any of these customers. And then we try to get into what we call a project development agreement or something similar to that, what we've done with Fortis. And those are kind of key terms, if you like, of what a partnership or a license agreement looks like. In the case of Fortis, that MOU to that point was about 2 years. That was our first. The first is always a bit harder. Now that we've got more established terms, I'd expect that window to shorten, but that's normally the process. MOU into a PDA into then a fully fledged license agreement is typically the process. Timing depends. I will say large organizations are slower. That's one thing that works against us a little bit. So having a diversified portfolio of prospective customers is key so that we've got multiple discussions going on at any one time. You know, that's generally the process and the timing. I don't want to put too many timeframes on it and be held to it, but I think, you know, what we try to do is work it as fast as we can. The process by going from an MOU to the PDA is the hardest because you're talking commercial terms. To go from the PDA to the fully termed agreement is generally shorter because you've already established the main terms. But you're really talking license fees, as you know, and other 2 or 3 other license terms that are the key terms, and generally license agreements are fairly well understood. And our license terms are pretty boilerplate, so.
Any questions online, Joe?
Questions on-
All right, what we might do is close and let the guys online go. Anyone in the room like to have a chat with any of the Hazer employees, including myself or Glenn, we are happy to stay on as long as you like. So thank you again for your attendance. Glenn, thanks for the presentation. It was
you.
fantastic.
Thank you.
And so we're happy to have any further discussion. So we'll close at that, Joan. Thank you.
Thank you all.